in terms of the losers. No, I meant the Nifty 50 weightage is right here.
Contributors to the
fall.
Nifty fall is what we're trying to look at. And yeah, I suppose you're right, Niraj. TCS will definitely be on top of the charts there at about 40 points. But the Bajaj
FMCG.
Finance up there was interesting to me, considering that Jeffrey's note this morning also talked about the impact of a Poonawalla FinCorp, etc. Both Bajaj Finance and Bajaj Auto there is interesting to me. Banking not doing too badly relatively.
Banking not doing too badly. FMCG, IT clearly out there. Is the same picture at the broader end of the spectrum? Yeah,
broader end of the spectrum also hurting. Let's pull up what the broader indices are doing. The small cap and the mid cap today. So all about 1.5% down. It's the IT stocks that are hurting. And you saw the Nifty IT earlier about 2.5% down. But that overall broader market sell-off continues. It's IT stocks hurting the most, along with FMCG stocks. And some of those key components we'll talk about. JBM Auto is one of the companies that I want to pull up for you, and we'll talk about why this has been an interesting play even on an otherwise weak day. Order wins over here, and at some point of the day this stock was 26% up. So they've been awarded by Convergence Energy Services Limited under the PM E-Bus Seva scheme. It's a 7,500 crore order. So that's big for the company, and that stock has been up. Piramal Pharma is having a good day because of a Jeffrey's note that has assigned a buy rating, and that too of a target price of 170. So at 120, it's looking quite attractive. We talked about the FMCG pack being down. Tata Consumer is one of those reasons. A negative note there from CLSA, which has come in, and they've initiated coverage with an underperform. Poonawalla FinCorp actually flipping. It was doing pretty well in the beginning of the day because of management changes, etc., but now looking quite weak. So overall, you have a day of selling pressure. There could be a variety of reasons, and perhaps, look at all of the events happening. Here you have the Fed meet, which begins later tonight, and it's not really considered that you will see a very positive commentary coming out of it, and that might be some of the concern.
If that comes out, that's a big positive surprise, which, Tamanna, you're right, the market is embracing itself for. So, that's the long and short of it. Let's get in our guest to try and understand what to do in a scenario like this. Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, joins us to talk about the technical end of the market, and Dharmesh Kant, Head of Equity Research at Chola Securities, on the fundamentals. Both of you, thanks so much for taking the time out. Vaishali, just wondering, is there more pain? Are the charts and the derivative positions showing that?
Well, I would say today for the first time, Nifty has broken the support of 21,900, 21,850. Now, let's see where we close. But if we sustain below 21,800 levels, I think it's calling for trouble. And even Bank Nifty, as compared to Nifty, is holding on well. So it's a wait-and-watch scenario for now. Let's see how we start our day tomorrow. But on the whole view, with Nifty below 21,800 is a corrective sign.
21,843 currently on the spot. And remember, we spoke about how the last 4 days the Nifty tested 21,900 and bounced back. If we are closing the way we are, then we're clearly not seeing that bounce. And from the looks of it, doesn't look like a bounce is imminent anytime soon. Dharmesh, would you stay off from any kind of buying in the near term, looking at the texture of the market?
Yeah, Dr. Niraj. Definitely. I mean, if you remember our last conversation, I was very clear that I am expecting 5 to 7% kind of index correction. And that correction I was expecting on Nifty. So it's still, the journey just started. I mean, nothing goes in a straight line, and I understand that. And there will be bigger sessions in between. But 20,500 is, and to 20,000 is the zone where, valuation comfort is likely to come in. And large caps have not corrected the way bit small cap has. So that bridge has to be narrowed. It will be getting filled in sooner than later. So as of now, we are just watching from the sidelines. A couple of stocks here and there, the trades are on. But beyond that, nothing much is there in this market. So stay put for some time, and then the fresh money can be deployed.
Fresh money can be deployed. The question is that would you pick up a TCS right now at these levels, or wait for it to sort of stabilize? I'll come to Vaishali on that. Vaishali, your take on TCS on the charts, and your picks for this afternoon, or your strategies for this afternoon.
Well, so TCS has been with a gap down, and we had a block deal coming in today and all. But well, right now, chartically, if I were to say, if it breaks 3900 levels, it could be in a corrective mode. So 3900 should be the trigger point. Till then, it's a wait and watch. We can see a bounce if market is stabilizing at these levels, but failing which, I think it would be calling for a corrective move. Now, as far as stocks are concerned and what looks quite comfortable in a market like this, well, I would start with Bajaj Finance today because after a long time, after a good corrective move, and it is coming out of its consolidation, and the indicators are also showing signs of reversal. So I would say this could be a good buy with a stop loss of 6,500 and a target of 6,800. The other stock, which technically looks well placed and as far as the risk reward ratio is concerned, looks pretty favorable, is Clean in the cash category because this too has corrected quite a bit and it has retested the previous bottom, of 1280. And from there on, we are seeing some bounce coming in. So, well, with a stop loss, it's a calculated risk, 1250 as a stop loss. Look for a target of 1400.
So, Clean Science and Bajaj Finance on Vaishali's radar, and that's quite interesting because, Bajaj Finance definitely having a good day. What's not having a good day is our stock of the day, TCS. So, the shares have slipped now, last at over 4% in trade. Let's just pull that up. The key reason is that Tata Sons is selling a stake. Now, Tata Sons is selling that stake. What we learn is because they want to pare their debt, they want to avoid having to list. And if they don't do that, they will perforce have to list by September or October 2025. Vishwanath joining us with more exclusive details.
So, Tata Sons is likely to have sold about 2.3 odd crore worth of shares in TCS. Now, this was, of course, reported last evening through sources that Tata Sons will be looking to offload some part of its stake. Remember that Tata Sons owns about 72.4 odd percent in TCS, and what they were looking to sell represented just about 0.65%. That was worth around 9,300 crore. Why is Tata Sons doing this? Well, what sources are telling us is that the proceeds from this sale will be used to retire some of the debt on Tata Sons' balance sheet, which will aid in the process of avoiding a mandatory listing. Of course, alongside the share sale, Tata Sons will also have to undergo some amount of corporate restructuring, move the financial services businesses into a separate holding company, just so that they can avoid that mandatory listing, which is, according to RBI norms, supposed to happen before before September 2025. Now, if that is a process that is being followed, then Tata Sons will escape that mandatory listing and will likely have some amount of restructuring within the financial services businesses.
Okay, so that might be the reason that Tata Sons is selling stake, but nothing per se negative fundamentally for TCS. The fact is that the pain points you're seeing is across the IT pack. And Dharmesh, just a quick take on both TCS and IT overall.
Yeah, you nailed it. Because if there is a fund selling in TCS, the parent group is selling. But what about the other stocks, why they are falling? So we discussed this, Tamanna, online many times. But the fact is that, these companies have to align with products which are AI enabled. And yesterday I went through a few articles in the US journals where they were talking about the same. For example, Salesforce and Apple, they were mentioning that they have to align with products given by Oracle, or Google's Gemini, or Microsoft, so which are AI enabled. And that is where the problem rises, and I think that rub-off selling effect has come into our markets as well, because much of these companies are still to do the same. So unless that happens, that clarity emerges, we will see selling pressure in these stocks, though in a trading range. And the future growth outlook and profitability, revenue, margins, and all are dependent on the functionality of how soon they're able to launch products which are in line or in alignment with the AI-enabled products which are there in the market now.
Okay, 4%, and it's brought Nifty IT to its knees as well. Before we kind of talk about some of the others, Vaishali, is there more downside here, or are stocks like TCS maybe at key support levels?
So TCS has been one such trade today. So I would say that let's see if today's low is broken, then of course we would be seeing some more corrective move. But talking about Nifty IT on the whole, I think it is showing some signs of exhaustion, and it's a wait and watch scenario because this too has opened with a gap down, and if 35,600 levels break. This is what I'm talking about, the IT index. If 35,600 levels break, then we are seeing a further downslide.
What else? Today, not too many gainers. I mean, Paytm is a separate case in point, but there is maybe Torrent Power, which has done well. RK Forgings has bounced back today, so about 3.5% higher for that one. So that's doing okay for itself. But otherwise, not too many stocks really flying on the A group. I mean, in some sense, there are more pronounced losers than gainers in the session, and that's to be monitored. Amber Enterprises, for example, is down another 4% today, and Siemens is down another 4% as well. So a few stocks floating around with some bit of downside. Time for taking a quick break on that note. We come back from a break, try and talk about the BOJ decision and the upcoming FOMC decision as well with Manish Singh of Crossbridge Capital, and of course continue our conversation with Dharmesh and Vaishali.
All right, markets having a tough afternoon. The Nifty now under the, testing the 21,800 levels, but a bit of a recovery, about 200 points down even as we speak. 72,000 turning out to be tough for the Sensex over there. IT stocks, the culprit. FMCG stocks, the culprit. I want to talk a bit about Tata Consumer and Dharmesh with us. We're also speaking with Vaishali Parekh. Let me come to Dharmesh Kant first on FMCG, PAC and Tata Consumer. Specifically, there is a note out there which is, maybe causing a bit of that overhang today. But as a stock, what do you make of Tata Consumer at this point, Dharmesh?
See, Tamanna, as far as business is concerned, it cannot be painted with other QSR companies for Tata Consumer. It's a different segment altogether. If you are comparing this with, say, a Jubilant Food or a Sapphire or Devyani International and the likes. But having said that, the only problem with even Tata Consumer is, as has been the problem with most of the companies in this market as of now, is the valuation concern. So there is hardly any scope of error out there. You cannot miss on margins from here on, and the valuation multiples are too high. So they have been, whatever management has, guided for the same store sales growth or the new stores opening, everything is in place. There is nothing wrong out there. But in such a market environment, when everything is getting under the brush, so I think Tata Consumer is also being painted with the same brush. And on downside, say a 5 to 7% more correction from here, it would become attractive at least to have a stake in a portfolio in a staggered approach.
Okay, well, there is clearly pressure on the FMCG space today. So aside of IT, FMCG is the one which is bringing the markets lower and putting the pressure as well. Okay, like we said, we'll talk a bit about the BOJ decision, implications if any, and the upcoming Fed meet. Manish Singh, CFA, Chief Investment Officer, Crossbridge Capital, on the phone line from London. Manish, great having you. Thanks so much for joining in. Good morning to you.
Hi, Niraj. Good morning.
How do you assess what the BOJ has done? Widely anticipated, so in some sense not a surprise, but the impact thereof.
So if you see, they have raised rates. Yes, the rates are back in positive territory after 17 years or something, but they are still buying the bonds. So they say that they have got rid of YCC, and they would like that yield to go higher, but they're still buying bonds. And so, in my opinion, while this is a step, but this is just a baby step to really letting the yield go higher. I mean, they would like the yield to go higher because that means you're out of the disinflation or deflation trap that they have been for such a long time. What they have done is they're not buying ETF, i.e. equities, right? And there's something else they stopped buying, I can't recall. But the fact that they're still buying bonds, they're still guiding that yield is going to be in that 0.1% range, just tells me that while this is a step, because they have come off the negative rate, but this is not a major change. And for that to happen, you will have to see inflation in the economy and robust GDP growth for them to really act. And if that doesn't happen and Japan is still in a deflation trap, then they will just stay here and they could stay another 10 years or 5 years at this 0.1% instead of negative is there for 17 years or last 8 years at least.
Yeah. And in fact, they do make that clear as well, Manish. Hi, Tamanna here, and great to speak with you. Yeah, so they do make it clear that they're not perhaps switching to an aggressive rate hike regime or any such thing. Just from the Indian perspective or the emerging markets perspective, I'm trying to understand what this really means in terms of an impact. Do you see any at all?
So I would say on the face of it, not really. However, the world is definitely interconnected. So if you see an increase in yield, then what will happen is that you will see repatriation of capital back into Japan, because the export of capital from Japan is one of the big things. And I was told this by a Japanese economist that every time the central bank governor of France addresses the Japanese investors in Tokyo, he thanks them for buying OATs, the central government bonds. So what happens is that there's an excess of capital, a huge amount of capital in Japan, and because they couldn't find yield or they had negative yield to start with, those money flowed out, went into US Treasury, European bonds, maybe some in India as well. So if the yield goes higher, then clearly you will have yen getting stronger, capital coming back into Japan. But for capital to really come back into Japan, it will be driven by GDP growth and inflation expectation, i.e. nominal growth expectation. Now, if that nominal growth comes only for 1 quarter, 2 quarters, you're not going to see major allocators change allocation and move back money from US, Europe, or India back into Japan and then to move it back again in 2 quarters. So one has to really look a few quarters down the line and see what happens. But if the nominal growth does come back in Japan because of structural changes, then it will mean that capital will go back, or the Japanese capital will go back into Japan.
Manish, the other big factor and what everyone's looking for is the two-day FOMC meet starts Tuesday. What would be the key indicators that are on your watch list? Are you looking at commentary as to when? Because you're seeing a bit of that concern in global markets. I mean, we're talking to you during the Indian markets closing session today, and it's definitely not looking like a good afternoon. How key would be the commentary that comes out on Thursday?
So there are two things about the U.S. when we are looking at. For equity market, one has to always think in terms of liquidity. Where is this money coming from that's going into U.S. equities or U.S. dollar assets? And there are a few explanations where this is coming from. Because when you have energy prices, especially natural gas, which has come down from 5.3 BTMU to 1.4, a lot of capital that is tied up in inventory gets available. So that is one. Second is that M2 expanded a lot in COVID time, and it is still high compared to pre-COVID levels. So a lot of liquidity has helped. And third, obviously, you had the 1.5 trillion or 2 trillion of spending that Biden administration did. So that liquidity is driving growth, making life difficult for Fed to cut rates. And in my opinion, Fed should not cut rates until they really see inflation has stabilized. By the way, I'm not afraid of inflation. I think that we will go into disinflation down the line. But in the short term, Fed doesn't have to act. And the equity market doesn't have to get a rate cut to go higher because it is being driven by GDP and earnings growth. And you have seen earnings growth. I mean, the earnings growth even for tech stocks, and I'm sure this happens in India as well, these are not based on multiple expansion. These are based on real growth. So if that real growth happens and multiple expands maybe once or twice, you will still have higher equity despite no rate cut. And that's what is happening for the last 6 months. People are waiting for rate cut. Equity market is going higher. The equity market does not rely only on rate cuts. It relies on GDP growth. So in the Fed communique, I would look for things. Is there a problem in the commercial real estate market in the U.S.? And how does that impact the banking sector? Because last thing you want is that the commercial real estate goes bad in a big way, and then Fed has to cut rates back to low levels to help the banking system. That will be tragic.
Yeah.
Because low rates just does not help anything, makes the situation worse for next time around. So I will be looking for if there are any signs of that in the market. And if it's not there, if you're reassured, then you should be buying the asset because earnings are coming through. US GDP is still growing at 2.5%. There's plenty of liquidity, and the wealth effect just carries on, and that will feed into other asset classes.
Right, absolutely. Just one take from you, Manish, on India and Indian markets going forward. We're going into election period. And this whole narrative that a lot of, foreign inflows are sitting on the sidelines waiting for this election event to be done. Just wanted your take.
So from what I see in terms of the poll and poll numbers, it seems that this government is going to come back. So the capital that looks for political stability already has an answer, that there is political stability. And there has been a lot of change, structural change, which is going on, and a lot of it has been delivered. So, of course, some people may be unhappy at the pace of change, but the first thing a capital looks for is political stability. And on that basis, I think the story remains sound. Of course, there are other changes that should be done in the economy, and we can have the discussion at length some other time. But I think on the face of it, I don't see what will change from now and after election. It would probably be status quo in terms of the political stability and the policies that have been announced.
Absolutely. Thank you so much, Manish Singh from Crossbridge Capital joining us from London on that outlook. We spoke about Bank of Japan, we spoke about Fed, and of course Indian elections. In fact, that's part of the conversation I had with Arvind Panagria. He is the chairperson of the 16th Finance Commission now, and in his first interview after taking on that position, he spoke, amongst other things, of what he as an economist expects from the government when it comes to power. Whichever government comes to power, it is expected it will be a third iteration of Modi 3.0. What are the reforms expected from that government post the 4th of June? Listen in.
There is unfinished agenda of reforms which the new government will need to take up again. The obvious one that is there is the implementation of the 4 labor codes that had been passed in 2019, but for reasons that the states have not written, still not all states have written their rules and regulations, and these 4 codes need to be implemented in all states simultaneously. They have not been yet implemented. So that's something, a lot of progress has happened. Most of the states, I think, leaving aside probably 2 or 3, have done the rules and regulations. So that's one big reform really waiting to be implemented. And that's something which I hope the government, once it comes in, is able to implement right away. Then we have the privatization program, which is also part of the policy of the government, certainly the present government, privatization of public sector enterprises as well as privatization of banks. On the former, the PSEs, the government already has a policy in place, where it makes a distinction between strategic sectors and non-strategic sectors. And a large number of enterprises in non-strategic sectors can easily be under the policy. privatized, and so that's another area of action that is part of the policy, part of the program currently. And then we get into tougher areas which really are largely in the domain of the states. One very important one is the land. Land in the Indian cities, particularly I'm talking urban land. Urban land in India has tended to be extremely expensive. And that obviously undermines particularly manufacturing, because manufacturing is what requires a lot more space. So a lot of kind of land-related reforms have to happen. And then agriculture, which again, the central government had tried the farm laws, and now certainly the central government cannot do it.
Yeah.
State governments will have to take lead in those. So these are some of the major areas that the government will have to take up once it comes back.
All right. Well, that's Arvind Panagaria. Just before we take that break, Tamanna, very quickly, what was the key thing that stood out in this?
Well, what was interesting is that because he's speaking in his personal capacity, he can't speak on what he's going to do in the Finance Commission. He's just taken over. I asked him about electoral bonds. And I found that interesting because he's backing it. He's saying the bond system was better. Now you're going to be back to cash. So that 5.1 inflation in India is like, we shouldn't really worry. Though, of course, he wouldn't second guess what Shaktikanta Das is going to do. But everyone's waiting for Powell to act, including Arvind Panagaria.
Yeah, well, so that makes it 2 in 2, right? Because Nitin Gadkari spoke about this as well, that without bonds being there, I mean, what happened? So how he was kind of backing bonds too, if I'm not wrong.
Yes.
Electoral bonds. And now we have Arvind Panagaria.
And Kiran Mazumdar Shaw, as someone who's at the receiving end of flack for giving electoral bonds, she's saying that, let it be out in the open.
Yeah.
And we'll see on Thursday what data comes out, because that's what a lot of people are watching as well.
Should be interesting. Nevertheless, so viewers, if you missed that show, it'll play out later on the channel. It'll of course play out on all our social media handles. You would want to hear what Arvind Panagaria has to say. Let's take a quick break. We're still in conversation with Vaishali and Dharmesh, and we'll continue that. But we have to slip into a break right now. Other side, we'll get in BTST ideas, latest from the derivative markets, because my colleague Agam will join in and break down what's happening in the derivative space today. Stay tuned.
that weakness persists in the market this afternoon, and are we seeing that reflecting across the board? Agam is standing by. Agam, it's definitely been sort of a bearish trend in the derivative space as well.
It certainly has, and at least as far as the benchmark, the key benchmark, the Nifty 50 is concerned, well, a lot of traders have taken this as an opportunity to test that support of 21,800. At the moment, while we may have momentarily broken below that level, we still are maintaining that mark and we have seen just about a barely 2% increase in open interest. This continues to be the trend over the last 10-12 hour sessions, something that I've been highlighting every now and then. So we haven't really seen too much traction as far as your increase in OI goes, or decrease for that matter. It's stuck here at around 250 to 260,000 odd as far as your units go. But moving on to the Bank Nifty, that's where again there's been about 0.3% decline. The Bank Nifty is in focus because the Fin Nifty of weekly options expiry comes through, and that has also been very, very quiet today. And again, as far as the Bank Nifty futures go, we've seen very little change in open interest there either. Moving on to very quickly how things are shaping up as far as the Nifty options are concerned. Again, a lot of consolidation around and below the mark of 22,000, and as one might expect, a little more call writing here, as you can see, around the 21,900 and the 22,000 calls. Moving on to how things are stacking up as far as your overall open interest distribution is concerned. Well, naturally, we will have the 22,000 call as the one with the maximum open interest, even as the Nifty loses out on that level and closes below that mark. Moving on, the Fin Nifty expiry, that's where we were keeping an eye on things, and it most likely seems like the Fin Nifty will also expire around the mark of 20,600. This is exactly where it is right now, and it does seem like all the traders who had gone ahead and sold those calls and puts around that particular strike are in the money at the moment. And finally, coming down to stocks, we have pressure for TCS, Indus Tower, along with something like an Asian Paints, RVC, L&T Technologies, all of them looking at shorts. And in terms of stocks which are seeing unwinding in futures, well, Aurobindo Pharma and Tata Power looking at longs unwinding. Tata Steel, Bajaj Fin and Balrampur Chini are looking at a little bit of short covering, but not too much to speak for otherwise. I reckon at the moment, all eyes will remain on the Nifty and whether or not it can in fact defend 21,800, because that's the mark that at least a lot of your technical analysts were keeping an eye on in terms of a key support in the near term.
Thanks a lot for that, Agam. So clearly some things to watch out for and some pressures to watch out for as well. We've spoken about how IT has been the corrective move. What we didn't get a chance to ask Vaishali about was the pressure on FMCG stocks and the kind of cuts that we've seen on some of those in the session today. Now, Vaishali, the index is down 2%. Tata Consumer, ITC and some of the other heavyweights, all of them down in trade. Maybe you gave us an idea, maybe you didn't, but if you were asked to get or recommend a trade on any one of the large FMCG names, which one would you choose and what would the trade be?
So in the FMCG, I still like ITC because, that has been a safe
See, you're saying?
Sorry?
You're saying you like ITC. You'd go long on it.
Yes, it could be a good positional trade because, we have seen a long consolidation at 400 levels. And from there on, we are seeing that, yes, the stock has attempted to bounce. But this is the only stock which looks good because, and that too may correct, but because overall I'm seeing that the FMCG counter is under threat because, it's currently at a 200-day moving average. And let's see, if we close below that, it calls for a further selling pressure. So I would not really recommend a buy, but well, if I have to, I would choose ITC.
Another one in the space which is seeing a hit today is Patanjali Foods. That's because Patanjali Ayurved case is going on in the courts, and Baba Ramdev and Acharya Balkrishnan have been summoned for a misleading ads case. So it's nothing to do in terms of balance sheet with Patanjali Food, but sentimentally you've seen a pain point on that stock as well. Overall that weakness definitely persists, and I want to come to Dharmesh. On, you'd agree with the play on ITC, or would you touch any of the consumption space right now?
No, Tamanna, I would stay away from most of the consumption space, and the reason being because, to my mind, the input prices are going to go up going forward. It's Q4 and the Q1 of next year. And two of the states have already taken MSP price hike of the wheat, and wheat becomes a very key ingredient for companies like ITC and other, biscuit makers and other food makers. So it's a painful scenario for most of them, and with crude prices going up, even their personal care segment will have that pinch of a higher input prices. So I don't think it's the right time to get into these consumptions. We have seen volume growth was only 1.5 to 2% for most of these companies, which are likely to be the case. Then maybe just before elections, there are some, freebies out there, and that's the sentimental play which people take. But beyond that, I don't think any of the QSR or FMCG play merits a long-term buy rating in the current environment.
Another focus area is the pharma space, and especially Piramal Pharma. Jefferies has reiterated a buy call on Piramal Pharma today, and so the Nifty Pharma, of course, is down like everything else. Piramal Pharma is having a decent day. Anushi is joining us with more details. What is Jefferies like, Anushi?
Right, Tamanna. So if you look at quite a substantial target that Jefferies has given, about 47% of an upside here with a price target of about 170. A couple of handful of reasons that they have cited out over here. First is the revenue projection that they say that about 12.5% for the next year, which they expect it to exceed going forward. Another is the margins remains on a focus area, which they expect to improve to about 16% compared to about 13.9% it currently has. Also, another is the net debt to EBITDA, which the company is aiming for, is estimated to be about 1.6 times by FY26 compared to about 3.5 times currently. So almost about half of reduction over year. Again, now even if you are to look at the valuations for the companies on the EV EBITDA basis, it is comparatively much cheaper than its peer group. So that also brings the company in a focal area. Now going forward onto the strategy for the business remains on the company's improving CDMO mix, especially with the company driving for more innovation-driven products, which is supposed to be more margin accretive as seen by the guidance also given forward and the revenue growth projections as well. But on the downside, though, key debate continues to remain on the FY24 revenue and the EBITDA guidance that the company has stated because of the overall biologicals firm macro uncertainty that continues to remain as an overhang. Now, if you have to look at the analyst recommendation over here, no hold or sell calls, but there are like 7 buy calls over here, so that again puts the company in a favorable light. Just to give a wrap on this, if you have to look at the stock price movement also in the 1 month, the company has remained under pressure to about 10.2% downside currently. Meanwhile, if you look at the 6 months and the 1 year returns, it's about 21% of an upside in the 6-month period and about 84% gains in 1 year period. So this is all that has been happening in Piramal Pharma, and which is in focus ahead of the Jefferies note as stated.
Well, certainly active. Dharmesh, for the longest, Anushi, thanks for this, of course. Dharmesh, for the longest time, Piramal has flattered to deceive. And in fact, if CDMO, CRO spends are lower, it might find it difficult to achieve the double-digit growth numbers, as the Jefferies note points out as well. Do you track this one, and do you like it?
Yeah, post the demerger when it happened, I have not tracked Piramal per se. But in the pharma space, there are a couple of good opportunities out there, and the pharma is the only space. If you look in the recent market correction of the last fortnight, they have still been the outlier, and they have performed better on the relative terms. So I think Dr. Reddy's is one company which one should be looking forward to, along with, say, Cipla. So apart from that, Sun Pharma is now priced to perfection on the higher end of the valuation multiple, and there is no further story playing out there as far as blockbuster drugs or something like that is concerned. So there are challenges everywhere in the pharma space as well. But to my mind, DRL, that is Dr. Reddy's, and Cipla is still a good buy from a portfolio perspective. Piramal, we have not started tracking since that demerger has happened.
Okay, fair call. Dharmesh, before we let you go, if not now, then in lower levels, give us that one offbeat idea that people should watch out for? You're not recommending a buy at the current levels. So you may buy it at whatever time in the future, but what is that space? What is that stock? What is that theme?
I mean, the space and themes remains the same. There is no, two thoughts on that count. And the space remains the railway infra space, power sector, construction, metals, and to a small extent, the BFSI. So these are the four spaces which we are tracking very closely and waiting for opportunities. Unfortunately, the railway infra space, in spite of high volatility, we are not getting a good entry price to get into. So for example, Ircon International, if it is 170, 165 is a good buying opportunity. RBNL, anything below 200 is a good buying opportunity, which these companies are, not coming there. So I'm expecting if this correction continues, these prices will come through. And in defense, the only company which we are looking forward to is HAL. So railway infra, defense, metals, power sector, and BFSI are the spaces which I think would be again the flag bearers of the next uprun when it commences. But before that, 5 to 7% correction on Nifty from here on.
Dharmesh, thanks for your views. Always really appreciate your time today as well. Thanks for your time. And, Dharmesh spoke about HAL, and the HAL order flows have been very strong. In fact, and he spoke about PSUs, and we, in the morning, spoke to another expert, Vikas Khimani, founder of Carnelian Asset Management, on the PSU space and what's his outlook on OMCs, which have taken a bit of a drubbing today. Here's a small slice of that conversation.
It's just like how you see that, after every such a sharp run, last year was a stellar year for you, PSU. After such a sharp run, it is very natural for it to consolidate. And in case of some PSUs, I think probably a bit of an overstretch also happened. Again, it is not PSU, you can't brush it with a broad basket, but there are PSUs where still there is a lot of value. Or some part of the deep undervaluation went away. Today they are in a fair value zone. But I guess as the transition and transformation continues to happen, I think we will see more valuation re-rating happening. So I would say large part of the run is done, and now we will mostly track the earnings growth as Indian economy keeps growing. And also you have to look at sector specific. You really can't, because each PSU within a different sector will have a different lever for growth and delivery of returns. We've been very, very bullish and positive on PSU banks. We haven't sold any. We continue to remain invested because we think that will do well. Power sector, we've been quite bullish. We have continued to hold. So we haven't really sold anything because I think these kind of consolidation, correction, temporary things will come in every market cycle. And we would like to just continue to hold and play out the full story.
In some sense, is the market getting unduly worried about what's happening to oil marketing companies? Moat around the business looks okay, but yes, there has been some intervention and some uptick in crude prices, but the derating has been very significant.
To be honest, we haven't really bought any of the oil marketing. That's why I'm saying that you have to look at different sectors. We do where we think there's a good management control on the future, on the fate of the company, and there's sectoral tailwind. Unless we are convinced about these two, we won't buy. And specifically in the PSU segment, in any sector, any ownership matter, but especially in PSU segment, especially oil marketing company, that, it's not been the CMD of oil marketing company doesn't control the outcome. There are lots of variables, so we have never kind of taken bet on that.
Right, interesting take there from Vikas Khimani, especially on OMCs, Vaishali. I'm wondering if you have a take on any of those OMC plays?
Well, so ever since the news came of the petrol prices going down and all, there has been a corrective move and it has substantially corrected. So let's start with BPCL. If BPCL breaks with 550 levels, I think overall the view could get damaged and we could see further selling pressure coming in. And overall, now that you're seeing the market closing at 21,800 levels, it surely calls for a word of caution. So reasons could be any, but chartically, I think most of the stocks are showing exhaustion and weakness.
Okay. So, well, certainly OMC is under a bit of pressure. HAL is under a bit of pressure too, and that's gotten a bunch of order flows. What are the supports for Hindustan Aeronautics, Vaishali?
I'll just have a look.
Vaishali, can you hear me?
Yes, just a minute. I'll
Sure. Yeah.
Well, currently it is at a support level, but I would say, 2850 to 2900 should act as a crucial support. If these levels break, I mean, if below 2800, it would call for a trade reversal. I mean, it could be a reversal in the trend.
All right,
Okay.
interesting story there, which you're seeing on your screens, and we'll get more details on that from Smriti, who's broken that story. Prestige Estates will be developing 6 hotels with Marriott International. Now, Prestige under pressure there, as is the real estate pack as well. But, even take a look at iBull's reality. iBull's is having a particularly hard day. And we'll come back to the Prestige story and more details with Smriti in just a sec. But just look at iBull's reality. 10.5% down now. Extremely weak. Do you track this on the charts at all, Vaishali?
Oh, yes. Actually, till yesterday, it was showing a positive momentum. And today we are seeing with a candle like this, I think it is clearly showing resistance at 120 levels. So only above 120, the trend continues to be positive. But for now, it needs to also break 100 levels to see a further downslide.
Okay, well, watch out. Real estate certainly under a bit of pressure, but Prestige, not that it's seeing a spike, but this is an interesting piece of development, and we'll wait for this to come about. But the other aspect of this is what happens to the hotel, what's happening within the hotel space, and the kind of expansion that companies are doing, Indian Hotels, Marriott, etc. So quite an interesting pocket to keep looking out for. It's been a busy last 24 hours, Tamanna, in that there is the BOJ meet that's happened. We've seen crude price spike, as a result of which some of these things are happening. And I was speaking to a portfolio manager today, wherein there is a large presence of hotel stocks in his portfolio as well, believing that we are still in the midst of that 5-6 year cycle that typically comes about in the hotel industry, because it's so cyclical. So the belief is that we are not at the end of it. So therefore, ARRs, even if they don't go up further, might still stay at these levels for the next 12 to 18 months.
Do you recall when we had Vijay Kedia speaking with us earlier this week, and he said he's betting on tourism in a big way as one sector. I just want to pull up Lemon Tree as well. Lemon Tree had news this morning. They're debuting in Tripura, and relatively, they've not had a bad day. I mean, everything is relative right now because this market is seeing that kind of a pain point, and one reckons it's going to continue till you have some clarity, at least from the Fed. All right, Smriti is joining us. She's got this exclusive story. Marriott International is likely to ink a pact with Prestige Estates for 6 hotels. Give us the details, Smriti.
Well, yes, that's the news coming in from the sources that Marriott is going to ink a pact with Prestige Estates. Now, this is for 6 hotels. To give you the location of these hotels, 3 of them are in Bangalore itself, 2 are in Goa, and 1 is in a place in Karnataka. It's called Sankleshpur Plantations, where the hotel is going to be made. Now, the cumulative inventory of these 6 hotels is around 801 keys. That means it'll have 800 rooms cumulatively in the 6 hotels itself. Now, just to give you an idea of the capex that Prestige has been doing, it has a total capex for hospitality sector of about 1700 crores by the end of December, of which 883 crore capex is yet to be put into upcoming projects. So while it is not yet known what will be the capex into these 6 projects, but this might be this might increase their capex from 883 to even more. Now, within these 6 hotels, the Marriott is also going to debut with its one more brand that's called Autograph Collection. This will be in Goa, and this is going to be the first one in India itself. The other one is a Moxie Hotel. This, we've seen one open in Bengaluru, and they're going to open another one in Bengaluru as well under this pact.
Okay. Smriti, I also saw a news flash which said that there is an exclusive first in India or Asia Autograph Collection hotel coming in. By any chance?
Yes. That's like I mentioned, this is a Marriott brand, and they're going to be debuting with this brand in India. This one is going to be in Goa.
Okay. Smriti, thanks so much for putting this into perspective and breaking this story. So, Prestige Estates on a given day, this could likely have caused a reaction. The markets being what they are not quite there, but interesting. the pace at which hotel brands are expanding, Tamanna. Marriott recently, there were 2 properties signed with Oberoi Realty, one for Thane and one for Bengaluru, and Borivali. So MMR region, 2 properties signed. And now apparently they are on the throes of inking a pact for 6 more properties with Prestige, in addition to what they might be doing on their own individually as well. So expansions in the hotel space are happening at a real fast clip.
And 3 of those 6 in Bengaluru.
And 2 in Goa.
And 2 in Goa. I mean, one would think that there are enough hotels in Goa, but yeah.
But clearly not.
Clearly not. So look at the kind of peak that you're having there. So tourism definitely an interesting space to watch out for. Well, just a few minutes to go for markets close, and we've been covering so many stories, but the fact is that the big overarching theme right now is pre-polls, and we have this special show that editor-in-chief of the NDTV network, Sanjay Pugalia, did. He spoke on the battleground for Maharashtra. Remember, that's going to be a key state in the general elections, and he also spoke with Nilkant Mishra, Nilesh Shah, among others. Listen in.
सरकार जो कोशिश कर रही है पिछले कुछ वर्षों से कि मैक्रो इकोनॉमिक स्टेबिलिटी पे फोकस करे, कि आपको हमने बता दिया कि भाई देखिए ग्रोथ मोटा मोटी इतनी ही होगी, आपका इन्फ्लेशन जो है वो मोटा मोटी इतना ही होगा, इंटरेस्ट रेट इस तरफ से स्टेबल होगा, एक्सचेंज रेट इस तरह से स्टेबल होगा. तो अगर कोई पूंजीपति अगर निवेश करने को तैयार हो रहा है तो उसको अगर ये क्लियर हो जाए कि भाई अगले 4-5 साल तक ऐसे चलने वाला है, तो उसके इन्वेस्ट करने के चांसेस बढ़ जाते हैं. और जब 4 लोग इन्वेस्ट करते हैं तो 5 और लोग भी आ जाते हैं कि भाई इसके कारण ही इकोनॉमिक ग्रोथ हो जाएगी जब इतने लोग इन्वेस्ट करेंगे. तो मेरे हिसाब से अभी तक का, और आप देखें जो बजट में भी जब सरकार ने वित्तीय घाटा खुद से 5.1% कर दिया, जबकि पूरी मार्केट तैयार थी कि 5.4% हो, तो ये जो स्टेबिलिटी ओवर ग्रोथ का जो पर्पज़ है, ये मेरे ख्याल से काफ़ी टाइमली भी है, क्योंकि अभी हमारी रियल एस्टेट मार्केट जो है वो अभी 10 साल के डाउनटर्न के बाद फाइनली उठनी शुरू हुई है. ये बहुत पावरफुल इकोनॉमिक फोर्स है. तो इससे जब घर बनने शुरू होते हैं तो फिर स्टील की डिमांड, सीमेंट की डिमांड, टाइल की डिमांड, लेबर की डिमांड सब बढ़नी शुरू होती है. तो मेरे हिसाब से इकोनॉमिक पर्सपेक्टिव से ग्रोथ की विजिबिलिटी अभी काफ़ी अच्छी है.
बिल्कुल. नीलेश भाई, शेयर मार्केट बड़ा मिस्चीवियस है. उसको अगर कोई ठीक से पढ़े तो वो बता देता है कि उसको पहले क्या पता है. तो जिस प्रकार का इंडेक्स चल रहा है वो करीब करीब ये माने बैठा है कि अब की बार 400 पार. इज दैट राइट?
सो मार्केट कंटिन्यूटी ऑफ गवर्नमेंट और गवर्नेंस दोनों को काउंट कर रहा है. ये सिर्फ $5 ट्रिलियन की खेल नहीं है, ये अमृत काल में विकसित देश होने की खेल है. एंड हमने हमेशा देखा है कि आज़ादी के समय हम और जापान पर कैपिटा जीडीपी में इक्वल थे या पीछे थे वो हमसे. 1960 में साउथ कोरिया और हम एक दूसरे के आसपास थे. 80 में चाइना और हम एक दूसरे के आसपास थे. ये सब लोग हमें पीछे छोड़ के बहुत आगे चले गए. हमने 2 कदम उठाए, उन्होंने तो 2 किलोमीटर चल दिए. सो अब की बार मार्केट ये डिस्काउंट कर रहा है कि ये अमृत काल में भारत विकसित देश हो जाएगा, और जो लोग हमें पीछे छोड़ के हमेशा चले जा रहे थे हम उनके साथ हो जाएंगे. और ये विश्वास इसलिए पैदा होता है कि 2014 में भारत जो 10वीं बड़ी अर्थव्यवस्था विश्व की आज 5वीं हो गया है, और अगले 5 साल में तीसरी के ऊपर पहुंच जाएगा, और अमृत काल के अंत तक हम दूसरे के साथ उसे नैरो कर देंगे. तो ये सिर्फ 5 ट्रिलियन का खेल नहीं है, ये विकसित देश होने का खेल है, और मार्केट को विश्वास है कि सरकार और गवर्नेंस दोनों इसी दिशा में काम करते रहेंगे.
All right, some great voices there. Niraj, how nice to hear Nilkant Mishra in his flawless Hindi.
Always
talking about Punjipatis. But, interesting take there on what the market is looking for in terms of the election. And it's not just continuity, it's about that path to Viksit Bharat or developed India and how we're going to get there.
Yeah.
That's, of course, long term. In the short term, it's a bit of an ouch afternoon. Vaishali, what are your BTST ideas? How would you wrap this day?
Well, it's not going to be a BTST, but I'd rather go for an STBT.
Fair enough.
I think I'll go for a sell short strategy in Shriram Finance. So I'll just give the level soon. Just a moment. So, well, one is also Cipla that I would look at for a short sell strategy. So Cipla is right now currently at 1432. I would keep a stop loss of 1445 and look for a target of 1400 level. So Cipla is one of the sell short counters that I would look at. And the other one that I would look at is now even Havells. So Havells is also showing signs of weakness. So, well, the stop loss would be around 1480 and the target would be around 1430.
Okay, so short sells for the moment from Vaishali on Cipla and Havells. Vaishali, thanks a lot for taking the time out and being with us on the show today. Really appreciate your time. 1.5 minutes left for the markets to shut shop and bring up the index intraday for you. Let's get the Nifty intraday here. 1.1%, so almost closing in or around the lowest point of the day. But if you can get the intraday chart of the Nifty, you'll see here, we're almost at the lowest point of the day for the Nifty. So no taking away the fact that it's an afternoon of pain, and we are closing well below the supports that we've tested for the last 4 days, which is 21,900. In or around the point of largest open interest, which is 21,800. This is spot, of course, but I'm just laying it out. And frankly, the market breadth has looked adverse. The Nifty 50 heat map will show you that it has been a terrible day. Let's just wait and watch what happens, unfolds over the rest of the week. But just Nifty IT and Nifty FMCG out there, coupled with select names like BPCL, Cipla, etc., all of them under pressure. So despite the fact, Tamanna, that banks did reasonably okay, because otherwise you see banks underperforming and taking the index lower, we are closing at the lowest point of the day, courtesy IT.
Courtesy IT, courtesy all the Tata Group stocks. I mean, of course, you're seeing TCS there at a 4.5%. But if you pull up everything from the Tata Group, Tata Consumer, Tata Motors, there was negative news on JLR. JLR in UK is having to recall some of its vehicles. And across the segment of all Tata Group stocks, you will see that negativity coming in. Of course, the broader markets are hurting. Let's not even talk about Tata Investments. That's on some other loop of being punished by the market for that
as it
one
should.
Spark report. It's paying the price since the last several days. But even on the broader end, and just let's pull up what the mid cap, small cap, and all of those indices are doing. 1.5% down. Those cuts are continuing. I also just want to pull up the Nifty FMCG and Nifty PSE. Two sets of stocks and counters which are hurting a bit. We've been focusing on IT and FMCG because of the big players there, Niraj, and Tata Consumer, etc. Colgate-Palmolive was dragging out the Nifty FMCG. But the fact is that PSE stocks are continuing to hurt, and that pain point is going to continue. Let's pull up the components for the Nifty PSE just to get a clearer picture of what your biggest losers were. And yeah, it's all the OMCs, and that's crude prices playing out. You're already nudging in the last, I think, 3 or 4 sessions between $85 to $87 a barrel on Brent, and that's BPCL, HPCL, Indian Oil, all of them with the understanding that the Indian consumer is going to be protected right now at the cost of these companies before elections.
Yeah, and that's essentially the reason. You nailed it, Tamanna, completely. Just before we wrap up, if the BSE 500, very quickly, before we wrap up, just to show the top losers and the top gainers at both ends. So Tamanna was talking about Indiabulls Real Estate, but look at Amber, SIS, Intellect Design, CRISIL, and of course Tata Investment. On the gaining side, interesting. A hospital stock up there. Torrent Power continues to gain 2 days on a trot now. Arguably the stock of the last 2 days.
What gives with 197? Paytm. It's nothing is improved, but at least the worst is over.
Yeah.
Perhaps that's what the take is as far as Paytm is concerned.
And this is on the UBS note when they say that Sapphire Foods is probably the best way to play the QSR theme. So up 4% for this one as well.
Swan Energy not too bad for the last few sessions either.
Yeah.
So all in all, I would say a dismal close to the markets today. Nothing really on the anvil which will change dramatically, at least tomorrow. You'll still need a couple of days to see what the Fed outcome is. Market still digesting what BOJ means. So let's hope for a bit of reprieve tomorrow. But for now, from Niraj, me and the entire team that put together India Market